Getting started with crypto trading can feel overwhelming, especially if you're new and don't have the time to analyze charts all day. That's where BingX Copy Trading comes in. It lets you automatically mirror expert trader strategies so you can participate in the market without hands-on management. With over 11.5 million copy trading relationships created as of mid-2025, BingX has become one of the most trusted platforms for beginners and pros alike. But here's the big question. Should you choose spot copy trading or futures copy trading, and which one matches your risk tolerance and goals? What is spot copy trading on BingX? Spot copy trading on BingX lets you automatically mirror the spot market trades of expert traders using your own USDT. Unlike futures, there's no leverage or liquidation risk, just real buying and selling crypto like BTC, ETH, or SOL directly into your wallet. This gives you full ownership of tokens while offering a beginner-friendly way to participate in the market without constant monitoring. What is futures copy trading? Futures copy trading on BingX lets you automatically mirror the leveraged trades of professional futures traders. Unlike spot copy trading, it allows you to profit from both rising and falling markets through long and short strategies. You can choose between two copy modes: position ratio, which mirrors a trader's margin allocation proportionally for near identical results, or per order, which lets you set a fixed amount per trade for predictable control. This makes it suitable for both hands-off users and those seeking tighter risk management. Which should you choose? Spot versus futures copy trading. If you want something simple, go with spot copy trading. You're copying trades directly in the spot market like BTC/USDT with no leverage involved. That means you actually own the crypto assets. Trades are executed in real time and risks stay relatively low. It's beginner friendly with a fixed 10% profit share on net gains and a maximum trade size of 10,000 USDT. Spot copy trading differs from futures because it doesn't use leverage, so while you won't see explosive gains overnight, you also avoid the risk of margin calls. In this mode, steady performance is key, and you can identify consistent traders by analyzing their metrics. On the other hand, futures copy trading comes with more flexibility, but more potential risks. Standard futures uses a fixed margin method where you choose how much USDT to allocate per trade, with profit share rates ranging from 8% to 13%. Perpetual futures adds even more options. Per order gives you control over trade sizes up to 10,000 USDT, while position ratio mode directly mirrors a trader's leverage and position size, with profit shares ranging from 10% for bronze to 32% for diamond level traders. In short, spot copy trading is safer and simpler, while futures copy trading offers higher earning potential if you're comfortable with leverage and risk. Spot versus futures copy trading on BingX both let you follow expert traders automatically, but they differ in risk and strategy. Choosing the right mode depends on your goals and risk tolerance. BingX doesn't just offer great opportunities for copy traders, which the video on our Elite Traders program, which offers passive income opportunities for copiers, following top traders who share strategies with millions, allowing others to replicate the trades in real time. With more than 15,000 elite traders on the platform, BingX has built one of the largest social trading ecosystems in crypto. Get started with copy trading on BingX. Ready to start copy trading on BingX? Follow these beginner-friendly steps to set up your account and begin copying expert traders. Firstly, create and verify your BingX account. Go to bingx.com, sign up, and complete identity verification (KYC). Then deposit USDT into your account using your preferred method, for example, crypto transfer, bank card, or P2P. Secondly, go to the copy trading section. From the top menu, select Copy Trading and choose whether you want to copy spot traders or futures traders. Thirdly, claim your free voucher. New users can get a free voucher to try copy trading with 20 USDT insurance coverage, reducing risk as you test the feature. Next, find a trader to copy. You can apply filters like 30-day return on investment, win rate, number of followers, or maximum drawdown to compare performance. Or let BingX AI recommend traders that fit your profile. Fifth, set your copy trading method and fund allocation. For spot copy trading, choose a fixed amount per order, for example, 5 to 10,000 USDT. For futures copy trading, select per order, set amount per trade, or position ratio, mirror traders' capital usage. You can also configure TP/SL, take profit/stop loss, enable zero slippage mode, and define risk limits. Sixth, activate copy and monitor performance. Click Copy to start. Track your trades under My Trades to Copy Trading, where you can view live P&L, adjust allocation, or stop copying anytime based on results. This streamlined process makes it easy for both beginners and advanced users to follow expert traders and manage crypto trades with minimal effort. So, which path will you take? Spot or futures copy trading? Both have unique advantages depending on your goals and risk tolerance. Spot copy trading is simple, beginner-friendly, and lets you own the actual crypto, making it a great starting point. Futures copy trading, by contrast, offers higher potential returns with leverage, but it also requires stronger risk management and a deeper understanding of market movements. With BingX's Copy Trading 2.0, you get upgraded tools, detailed analytics, and AI support to make smart decisions. No matter which strategy you choose, start small, diversify across traders, and track your performance closely. And remember, copy trading carries real market risks. There's no guaranteed profits, so use the tools wisely and stay informed to navigate the market responsibly. Don't forget to subscribe to BingX, like this video, and comment if you're going to try spot or futures copy trading. I'll see you next time.